Hi everyone, it's Chris here from New Zealand, and today we're going to be looking at the third tutorial in this series, and we're going to be focusing on how to interpret the technical indicators to help us determine our trading strategies. In particular, we're going to be looking at the methods that I'm going to provide to you on how to shortlist stocks. So in the stock market, in the US stock market, there are currently more than 8,000 stocks, which makes it very difficult to run through all of them and determine which ones provides the best probability for a successful trade. So we're going to be looking at how we can shorten that list and find the best candidates, the top candidates, if you will, so that we can have a manageable number of stocks to analyze and process. Secondly, I'm going to be showing you how to run some external analytical tools on a stock so that it can further help you improve your trading strategy and the confidence in the direction that that stock price is going to go. In other words, maximizing your potential or your probability of success again. And then we're going to be looking at how we're going to set up your trading execution. So we're going to be creating orders, and we look at the different types of orders: market orders, limit orders, stop orders. And we're going to be looking at how we position them, how we do position sizing. In other words, where do we set those target profits and where do we set a stop loss, and then sending them through to the brokerage platform. I'm using TradingView that you see here on the screen as my strategy or my technical analysis platform, and I'm using Interactive Brokers as my brokerage platforms. I also use another one here called Tiger Trade, which is a handy one for me to use from time to time. So I switch between them, and I've got some fun spread across them, but they all provide great features regardless of which of these you might use. It makes it easier to follow these tutorials if you use the same platforms, but really the same general principles should apply across the board. Okay, now before we kick off, let's just recap what we discussed in the last tutorial. And if you haven't seen that tutorial, I'd recommend you refer back to that one where we covered on the candlesticks and what they mean. In other words, are they bullish or bearish? And in general, what does a trend mean? Are we in a bullish trend or a bearish trend, or is it kind of consolidating, meaning that it's flatlining? Now, in this example here, I've got the Amazon stock selected, and we can see that it's making consistent higher highs and higher lows. And there again, a higher high and a higher low. What does that mean? That just means that as the stock has its swings in ups and downs, it is consistently moving in an upwards direction. So we can see there's a swing candle here, and that means that we've had successively higher ending candles, but then it's turned down a little bit. But then when it turned back in the upwards direction, it made a higher low than the previous swing candle, which was here. Now it's easy for me to see where these swing candles are because they're indicated as a technical indicator on my screen in TradingView. If you wanted to add the same to your TradingView technical indicators, you can add the smart money concept indicator. It's free, so you don't have to pay for it, and you can find it here from indicators if you type in smart money concept. So if you go here and you start typing smart money concepts, it should appear, and the one that I'm using is the one from Expo, which I think is just the top one. That's the one. Now we'll just have a quick look at the properties that I've set up here for mine. I can't remember if I just used the default ones or not, but the structure period that I'm looking at here is 21 days. We're on the daily time frame here, so it's 21 days. I've got these options selected. I won't run through them all, but you are welcome to copy these and use the same ones if you prefer. And then for my style visibility, these are the options that I got selected. Okay, now without spending too much time on that, let's also just quickly have a look at the moving averages settings that I've got here. So on the screen, you can see these lines here under my cursor. There are 4 of them, and these are my moving averages. And we explained what they mean and what they are in the previous tutorial. But just to recap, they are showing us the trend of that stock in different time frames. So for the first line that we see here, the kind of light orange one, we've got an exponential moving average, which is calculated on the close of the candle after each day, and we've set that over a period of 20 days. Then we've got another EMA 50, another EMA at 100, and then we've got an SMA, which is a simple moving average over 200. And those are the ones that I use for reference. You'll see in different tutorials, different traders using different sort of values. Instead of 20, they might use 18. You can go as low as 9. You can go even lower if you want. But for day trading and swing trading strategies, which is the one that I'm using, these are the settings that I would like to see on my screen, or the indicators with those settings I'd like to see, and what I base my calculations off of. Now, first, we would like to create a short list of stocks. And I'm just going to run you through the steps on how I do that. How can I reduce 8,000 plus stocks in the entire portfolio of available stocks to trade on the US stock market to less than 100, so that it's a bit easier for me to run through and then further shortlist the candidates with the highest probability of winning. So the steps we're going to be following is as follow. So we're going to create a TradingView list. In the TradingView software, we're going to create a list, and then we're going to export that list to a CSV file. I'm going to show you a custom set of tools that I've developed using Python and published as a web app that you can access without having any prior coding knowledge to import that list into the stock scanner. And then it is going to produce a short list of all the stocks where the EMAs are stacked in either a bullish or a bearish trend. And I'm going to explain that in a minute. We're then going to download the shortlist, and we're going to import that back into TradingView as a new list where we can further analyze and red flag the candidates with the highest probability of success. Now, before we run through the exporting of the lists, let me just explain what I mean by stacked EMAs and SMAs. As you can see in this stock here for Amazon, we've got the EMA 20, and underneath that the EMA 50, the EMA 100, and the SMA 200. Now we can see that they're not crossing over currently, but here in the past they were crossing over. We could also have a stock where they perform differently. Again, here on Intel, we can see they're stacked in a bullish manner. They're on top of each other. But if we look at this one, Bloomberg Natural Gas, we can see that the inverse is happening. We can actually see that we've got the EMA 20, and then above that we've got the EMA 50. And if we zoom out quite a bit, we'll probably see the other ones above that. But you can see that's indicating a bearish trend. So that's the inverse of the bullish one, where they're on top of each other. In this case, they are sitting underneath each other, indicating that this is a bearish trend. Now, what we want to know and make sure of is that these lines do not cross over, at least in the last couple of days. And I set a limit to 30 days, right? It's just a personal reference or benchmark for the stocks that I like to trade. So in this case, again, if we look at Welltower stocks here, we can see it's bullish because we've got the EMA 20 at the top, and they're nicely stacked in a chronological order all the way down to the SMA 200. So there are a whole lot of stocks I've got in this list here, and here's an example of one that I wouldn't like to trade necessarily, is where we've got them stacked bullish, but recently we can see there was a crossover, and what this meant is that it went from a bearish trade or bearish trend into a bullish trend, and in between there was probably this bit of a consolidation area where the prices went up and down, but not consistently producing higher highs or higher lows. So as you probably figured, in a bullish stock or a bullish trend, we expect to see higher highs and higher lows. So for Amazon, we can see we've got a higher high, higher low, higher high, higher low. But if we look at Intel, for example, yes, we're in a bullish trend, but we see a lower high and a higher low, then a higher high again and a lower low. So these are not great indicators. That's telling us that we are potentially heading for a consolidation period, which means instead of trending up bullish or trending down bearish, it's kind of going sideways, which is the worst thing. Because remember from our previous tutorial, if we're in a bullish trend, we can create long trade strategies, which means we buy cheap, when we sell at a higher price, making a profit. And if we're in a consistent bearish trend going down, then we can sell at an expensive price and we can buy it back at a cheaper price, making the profit between the difference of those again. So when we're consolidating, when we see this consolidating stock where we've got lower highs and higher lows in the same trend, that's usually not a great indicator, and that means I don't necessarily wish to trade this particular stock. Okay, now let's continue to produce those lists. So the first thing I'm doing here in the stock screener, so in TradingView, you've got a stock screener here at the bottom. And what I've done here is I've set up a screener that's going to check for all the stocks in the stock market that with a price above $9.99. And if we look at the additional filters here, I've set them up as follows. So pretty much including common stock only. So from the list here, I'm not including ETFs or mutual funds or any of the other stocks. I'm only listing the exchanges from NASDAQ and NYSE, and I've set my parameters for the average 10 and 60-day volumes above 500,000, and the same for the daily volumes. All right. So those are the only parameters that I've set up. So it means I don't want to trade penny stocks, and I don't want to be trading stocks that has got zero movement, zero volume within them. Now, this is going to help a lot, but it's still a great amount of stocks. You can see 1,013 matches on that. So what I'm going to do is I'm going to click on the export button there, and it's going to export this list to a CSV file for me. Now, from here, you can head over to chrisforster.com, that's me, /AI. And what I've done here is I've published my stock scanner web app for you. So to give you a bit of background, I've created these Python scripts to help me process this information and filter out the stocks, only the stocks that has had a stacked EMA and SMA over these time periods, and then list them for me in a new list that is exported. Also, you can see that I'm detecting a few things here like head and shoulders patterns, and I'm looking at the inverted head and shoulders patterns. Don't worry about those. We're going to cover that in future tutorials. It's too much to get through in one session, but just keep that in mind for now. Anyway, so now we're going to open the app to access the stock scanner. We're going to select and upload that CSV file that was just exported from TradingView. And important here to make sure, I forgot to mention, that CSV file must contain the columns ticker, description, industry, market capitalization, sector from TradingView, and sector from TradingView. Right, so these are the columns that has to be present. And if you're not sure how to do that, again, here in TradingView, you can set your columns. So if I click here on this browse button, I can start typing for things like volume, or I can type there for sector, and I can select them and add them to my list here. You can have more columns than the ones, and they can be in any order. It doesn't matter as long as these ones exist in the spreadsheet. And what we're going to do then is we're going to hit submit, and this tool is going to run for a few minutes, and it's going to find the stocks where it's either got bullish stacked EMAs and SMAs or bearish stacked EMAs and SMAs. And it's going to produce a new CSV for me that I can bring into TradingView again as a shortened list that we will further process in a few seconds. Okay, so there we go. It's completed. It's run through the whole process, and it's actually done quite a bit in the background, so it takes a minute or two. But once it's done, it produces two output files. There's the EMA stacks list, and there's the PyScreener text list that it has exported. Now, if we wanted to look at the spreadsheet that is produced, we could just click on download there. And if I just open this up in Excel, it's going to show us the short list of stocks that will either have a bullish or a bearish trend with stacked EMAs out of the box. And from 1,000, whatever, we've reduced this to 75. That makes it a lot more manageable and a lot easier to run through. Now, there's a few things we can do here. We can, first of all, create some filters. And if we want to check them from highest to lowest price value, or close value, we can quickly filter those out, or we can sort them by volume. By default, I've set this to sort by volume. So you'll see the highest, most trending stocks will be listed at the top, and there's one already, Key and Gold and Oxy and DVN, etc., etc. It's telling us which of those are bullish, which of those are bearish. So if we wanted to filter out only the bullish ones, we could do that, and we can see here we've got bullish stocks, And if we wanted to look at the bearish ones only, then here are the bearish ones. So a lot more bearish trending stocks than bullish ones. Tells us something about the market. Okay, so we don't really need to do much with this spreadsheet. I just like to have this available and see what's going on and filter through a bit of those. But what we really want is this pyscreener.txt. And if I click on download here, it's going to place that in my download folder. Notice I already had one, so this one has got a pyscreener and in brackets number 1. Oops. And if we now go to our TradingView platform, and from the shortlist here, the watch list, if we select watch list, we can then click on the list dropdown and we can select import list. So once I've selected import list, you'll see there is the text file we've just created. And if I open this, it's going to magically create a new list for me based on the stocks in that list. So that's the first thing we wanted to do. Now that we've finished importing our list, we can start scanning through these stocks. There are only 75 of them, so it won't take us too long to actually go through all of these and start identifying which ones has the highest potential of success. Now, notice some of these already has a blue flag next to them and some of them already has a red flag. That's because they appeared in my previous scans from last week. I do this on a weekly basis. They've appeared in my previous scans, and I've already flagged them in other lists that I've created. So I already have a red list and a blue list here, which I've created, and I'm going to explain how I get to those in a bit. The red lists pretty much indicates these are stocks that I've been watching for. These are new stocks that I've identified. And the blue ones will be stocks that I've been watching for a while. So I'd like to keep them in my list and just keep an eye on them and see what happens as they track along. And you can see on this one key, I've already created a trading planning strategy here. And for this one, I wanted to go short. So in other words, I was going to sell at this price and then buy it back at a lower price. And I set my stop loss here at the top. And I didn't execute this trade because I didn't feel like it had the best potential, but I was curious to see how it plays out. And we can see here that that trade would have failed actually. So glad I didn't go with that. Now let's look at the next one here, Barrick Gold Corporation. Immediately for me, this is a no-go because we can see that it is not really consistently making higher highs and higher lows. It's been a bit wobbly. It's actually had a trend reversal not too long ago. So I'm not going to go for that one. Next one here is Oxy. Another one that I'm already watching. So for this one, I have picked up another pattern, which I'll talk about later. This is a head and shoulders pattern, but it hasn't been fully executed yet, this pattern. It is still possible in the next couple of days or so, or maybe a week or two. So I've actually put an alert here to tell me when this price reaches a certain level. In other words, closing that pattern and making that pattern official, and then I'll decide whether I want to trade that or not. So let's move on. Next one. Again, with this one, I can see a bearish trend, but I see higher highs and I see higher lows within the mix. So that's indicators that I don't want to trade the stock. CVS. This one again, higher high on a bearish trend, not something I want to go. Here we go. This looks like a potential candidate, but we see a higher low, lower high, could be consolidating. No, because what we are looking for, as I mentioned in the previous tutorials, we're looking for stocks that has got the highest probability of following the trend. And here we can see a candidate. So we've got a lower low, a lower high, a lower low, a lower high, quite consistently on a bearish trend, right? So that tells us, okay, now we've got a stock that we can start working with. So I'm going to flag this one. I'm going to make it red, and I'm going to say, let's further investigate this stock. We can see that it has tested this EMA 50 line before on the previous swing. And if we go back a bit on the swing before that, it has also tested the same line. Now that could have been the EMA 20, it could have been the EMA 100 or 150 or 200 or whatever. But in this case, it consistently tests this line, telling me that if this high is testing or very close to testing this line again, it's got a much higher probability of dropping down and following the trend or the pattern that it has done before. Nothing is guaranteed, nothing is set in stone. We are making a best guess or a calculated risk guess here. So Taking this into account, we can say, all right, let's go and create a short position here and let's see what that would look like. So if we wanted to sell the stock, we'll have to sell it slightly below the market price. We would need to set our target price somewhere at a realistic level. Now, we know that in the past it has tested this line quite effectively. So what I'd want to do is set it a little bit above that EMA 50 line that I've got there. For my risk reward ratio, the target profit, what I'm going to do is I'm going to stretch this until I see a value of 1.5 or very close to it. That's kind of where I want to see my profits at. And then the duration, how long do I want to run this for? I like to keep it within 5 days, 1 week, no more, preferably less. Now you'll see there's this little dotted line here that looks like it's predicting the future prices. It actually is trying to do that, but that's not what I use it for. This one is called Echo. And what I do is I simply use this tool and do a 5 day forecast window on it so that it shows me where the next 5 days end so that I can easily create my trading entity there. So if I wanted to create a long position or short position, I can use that graphically without having to try and figure out which day is 5 days ahead. Of course, it's easy if it's the beginning of the week, but this could have been a Tuesday or a Wednesday. So sometimes it just makes the job a bit easier. That's really all I use it for. I'm not using this as a price prediction at all. I'm just using that little line to tell me where the next 5 days are. Okay. So now that we've set up this trade, it doesn't, or the strategy, we're not necessarily going to execute it. That's why I flagged it. I'm going to create a couple of these running through all of these stocks. And once I've done all of them, I'm going to look at them again one by one. I'm going to say, which of these has got the highest probability of success? Now, if we just analyze this stock without going through the whole list to show you what my process is, we can see here that the target price there is going to be $8.69. So we see that on the right-hand side there. And we can see that the target here, there's a label and it says 1.39. Okay, so that is the difference between the current price and where we want to set our target profit price at. Now 1.39, if we wanted to see what the ATR is, the average true range, which is the volatility of a stock during a time period on a daily basis, that would be a good indicator whether this is realistic or not. And I'm going to explain that in a bit. Now you'll see in my list here, I've actually got ATR, but I don't know where that stock is. So what I can do here is I can say, but show me the red-lined stocks, you see? And when I do that, my red flagged stocks here is displayed here. And now we can see that SunPower Corporation, and if we go to the ATR, we can see it's got an ATR of 0.56. So that's 56 cents. And we've got a target price here difference of $1.39, which is more than double the ATR. That is possible, but it's not going to happen in 1 or 2 days. It might take a bit longer. So that gives us an indication of how far out are we in proportion to the daily volatility versus what we expect to happen. If we want to make this a sure trade, we can set this risk reward ratio to something that is closer to that value, 0.59 perhaps. But now the risk outweighs the reward, which means that if we drop the risk here, that makes the risk reward ratio better. But the problem is that we would very easily trigger that stop loss. So what does that mean? When we set our values here for target price and stop loss, we're actually trying to say that if we reach a certain stage where the stock doesn't go in the direction that we anticipated, cut the losses and sell at market price. And that brings us to these different types of setting up your orders. So in other words, when we set up trades, and I'm going to explain it, let's select the short entity, and I'm going to select here create limit order just to explain what a market order, a limit order, a stop, and a stop limit order means. A market order means that we are buying or selling stock at the current market price, and that is changing all the time. So this could be volatile and risky. It means we don't really care what the price is. We're not making an offer. We're not setting a limit. We're saying that whatever the price is, I'm buying. This is not commonly used, but limit price is the one most commonly used. So limit price is saying that we would set a maximum price if we're going long that we want to pay for a stock. So once that price or below it, the best price below that or equal to that is accepted, then the trade will initialize. And of course, for short orders, such as in this one, it's just the opposite. So we say that anything more expensive than the price that we want to sell it at is acceptable. And once it reaches that, it'll sell if it's a short order. Now, a stop order is similar but different. A stop order means that we wait until a price, if we're going long, we wait until a price reaches a certain level. And this could be because we want to make sure that the stock is actually going up if we were planning to go long, or that it is going down if we were planning to go short. We're saying once it reaches that price, if it's bullish or a long trade, then we want to say buy at market price. All right. And if it's a short trade, then we want to say wait until the stock drops. And when it reaches a certain price, then we're even more confident it's going to drop further because it's already been dropping. So buy at market price at that price. I don't like to use stop orders for my main trades, but I'll explain that a bit because I do use them to set my limits. And then there's a stop limit, which means we are going to set a stop price, just like in the previous explanation for stop trades, but we're going to set a maximum or a minimum limit. So within that bracket, we said once it reaches that price, buy the stock, but no more than this limit price that we set. There are a lot of other trading types as well. There's something called like a trailing order and a trailing limit and a trailing stop, but we'll explain those and cover those in future exercises or tutorials. For now, we're going to use the one that says limit order. The price is going to be the price that we've determined here, so slightly below the current market price because we're selling it. If we sell it for a higher price, no one's going to buy it. And we don't want to sell it too low because then we're losing money. So you have to kind of, gauge what that price is going to be, but it's usually just below the close price or the current selling price. Don't worry about the ticks here. Don't worry about the USD risk and the percentage risk. We'll talk about them in a bit. Worry about the units. So the units is the quantity, how many of these stocks you want to buy. I don't like to buy partial stocks, so I would set this to a integer or a whole value. In other words, 28 or 29 or whatever, I would decide. Then we can set bracket orders. And that means that once it's reached its target, once we've made our profits, sell automatically. I don't have to sit up all night and wait for the price to reach its target and then quickly on my phone or on my computer execute a sell order to make my profits. The system will do it automatically if I set my take profit order. And here all we care about is the price. So that price is going to be 8.49. It's picked it up from my short trade entity here, and that's all we have to care about. We don't have to care about this value here. That's the total value, and we don't have to care about this value here, the percentage or the ticks. All you have to care about here is the actual sell price. And then there's the stop loss, which means that if the price doesn't go the direction we want to, instead of continuing to lose money or having your money tied up in this stock, sell, take your loss, get your money back at least or most of it, and then repurpose that in a next stock. Because when money is tied up in a stock, it's not working for us and it's not actually bringing us any value. So we want to enter trades, we want to make profit quickly, and then exit trades and then repurpose that money on the next trade. Now, that pretty much covers what we've got here, except I also wanted to talk about the regular trading hours. I don't mind trading outside of the regular trading hours. So usually I would select the option outside regular trading hours. And then for your regular trading hours, stop loss and take profit, depending on the brokerage platform you use, they may or may not allow you to set that up for your take profit or stop losses. But if it's possible, I usually do set them up outside of regular trading hours because I don't really care when it happens as long as it happened. And that is how we set up our trades, how we create our short lists, by exporting the list from TradingView, processing it using my tool, and then we analyze the stocks. There's one last thing I want to show you, and that is a further additional analysis tool that we can use to help us further plan our stocks. Once we've identified an ideal candidate, such as this one, this actually does look like a good candidate for a short sale, then we might want to say, okay, let's do a bit of a further analysis. What is the market sentiment? And remember in the first or the second tutorial, we said that if a particular stock is following the trend of the sector, then we have a 70% chance that it's going to continue following that trend. So if we look at SPWR and we look at its sector trend and it's following the same trend, in this case, the sector here is something I can't see is behind the screen, but I'm going to show you how to use my suite of tools to help you plan that. So you'll see there's a tool here called Stock, Trend, and Sentiment. And if I click on Open App here, just wait for it to load. We're going to enter the ticker, in this case, SPWR. So SPWR. And I'm going to upload the stock list that I've exported from TradingView earlier. Again, the same one. So I'm going to upload that. From here, I can see that it's industrial services. So industrial here is XLI. So what we need to do is from this list, we're going to select XLI, and we're going to click on submit. When you hit submit, it's going to plot the stock in blue, the stock trend in blue, and the industry in orange. And we can see initially it didn't follow the same trend, but now it kind of is. So from the, I would say here, if that is the 9th and this is the 5th, then it's probably the 6th or the 7th. We can see that it is following the same trend almost exactly. So that is an indicator that it is following the trend. There's also a sentiment analysis here. So this is based on hourly and daily outputs. And what it's doing is it's scraping the web for information on the stock, and it's trying to use machine learning principles to determine whether those new sentiments are positive or negative. We haven't got any recently. The latest one is June 28th from this stock screener, so it's not really telling me much. But from the trend, which is the most important here, we can see it is following the trend. In this case, it's showing an uptrend and then again a bit of a downtrend here. So that is something to keep in mind when we are trading. It is the overall trend here on SPWR is a downward trend, but the overall trend on XLI is actually an upwards trend. If we drew a line from this point to that point, it's trending upwards. So that might not be the ideal candidate after all. And I might need to go through the additional stocks here on my list and shortlist the ones that I think are the best. And once I've got them down to about 10 to 20, then I will go through each one again and see which of these to me look the best. And again, it's going to yield the results that I want. I thought I'd share with you my past 30 days trade performance based on the strategy that I'm following here and that I'm showing you. And you can see here, I took a screenshot from my trades. I've had 8 profitable stocks, 1 loss, and 1 break even. So out of 10 trades, there is 8 profitable ones, giving me a winning rate of 80%, which is really amazing. And it doesn't always go this way. Sometimes it's a bit lower. Sometimes, things doesn't go the way we expect it to. But what I'm trying to emphasize here is that when we analyze stocks and we carefully calculate the stocks with the highest potential of yielding a profitable result, then our winning rate is going to improve. And that is evident here. So this is the last 30 days, and that is the results that I've been getting. And you can see I'm taking this from Tiger Trade, which is the brokerage platform that I'm using for one of my portfolios. Here you can see the growth. So, and again, this is across 1 month. There was my low point, and currently here is the high point, and that was taken on the 10th of July. Today is the 16th, so this was a snapshot from about 7 days ago. And just to show you my rate of return versus the NASDAQ, so I'm outperforming there. And then just to show you again a more recent snapshot, this one was taken 2 days ago. Here we can see that window has now shifted a little bit. So the total number of trades I've had here was, I think, 11, because there's 7 winning trades, 1 losing one, and there was a couple break even. So, that rate has dropped a bit to 70%, but still a really good rate. Sorry, I see 10 trades. So that'll be 7, 1, and 2. Still a really good result, but it is very important to do proper analysis and planning. And if you do that, then you will reap the rewards. Okay. And that's it for today. So please subscribe and like, share, and leave your comments down below if you've got any questions or suggestions or just want to share something. And feel free to use the tools. It's at this location, chrisforster.com. It's me. /AI. And when you head to that location, you'll see some various machine learning and Python apps here that you can access and use for free. The first 2 is particularly related to stock trading. Thanks, and I'll see you in the next one. Bye.